Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're realizing a second day of upward price action. And today we're seeing a little bit more pronounced upward price action than yesterday, pushing the futures market into the 122 handle, 122.06. And now that is coming off of multi-year lows just a couple of sessions ago. So still some stabilization here at the low end of the range for a second day. And I think when you look at the driving factors today, I think a lot has to do with the reset in commodity prices. We are seeing oil coming under pressure for a second consecutive session, and commodities really across the board selling off now for a second day in a row. And with that, I think that's alleviating, at least temporarily, a little bit of the concerns surrounding inflation, at least resetting expectations. Also couple that with the fact that we are potentially getting news that there's a possibility of a ceasefire and some negotiations between Ukraine and Russia ongoing, and that's another factor, I think, why we're seeing a resetting of expectations. Now, when you look at the yields in the 10-year, we are seeing the yield dropping 6 basis points today, down to 142 basis points from 148 yesterday. And the yield curve continues to flatten. I know a lot of market observers are keeping a close eye on that, and we are now seeing it continue to narrow today with the two-year, 10-year spread now down to 4.5 basis points. So when you look at the front end of the curve, it's holding pretty steady today. We're not seeing much strength there pushing those yields down. Pretty flat on the day. But the backing of the curve, we are seeing some renewed strength in the futures markets, and therefore pushing those yields lower and flattening the curve once again today.